right? Oh, no. Can you see my screen?
Yeah.
Okay, cool. So, like I said, one more time, this is a daily support level. The
Okay.
chances of price breaking a daily support level is very slim. It hasn't really broke it. We can go back in the past to test. These are tests. Price
Mm,
since January, right? The last time it
mm-hmm.
broke was January 3rd. Since January, for 8 months, price has not broke this level. This is not a break right here. This is a test. This is a test.
Yeah.
A full complete break would be a full complete candlestick over that. This is just a
Gotcha.
test. As you can see the
Gotcha.
wick, right? So this right now, what is that representing? That means price doesn't want to break this at level, right? So the chance of it breaking that is very slim.
Right.
That is a daily, that would be a daily support.
Mm,
Does that make
okay.
sense?
Gotcha. Yeah. The red line. Yeah, I understand now. The red line. I was confused with the colors, but
Because
I
it's
get it now. Yeah.
accurate. So now what's another one? I'm gonna mark out another one. This would be a daily resistance for this area. Why? And I'm gonna mark it out so you can see it.
Mm-hmm.
Let me mark it out real quick, and then I'm gonna explain each one. Let's do this. Cool. So we're gonna zoom in so you can see. Look at this right here.
Okay.
Right there. Right there. So what do you see for the most part? Whatever price comes to this level, what does it do? It typically goes up, right? Price comes to this level, what does it do? It typically goes down. Price comes
Mm-hmm.
to this level, what does it do? Comes down. Every time price touches this red line, sells. Sells. Right here, it has a little bit of extra leverage. I'm gonna speak on this one. Every time price comes to this red, what does it do? Buy, buy, buy. Backtrack, what does it do? This one buys when it comes to this. Buys when it comes to that red level. So that shows you that's a daily resistance level for this time frame. You draw multiple daily and resistance and supports. Remember, supports and resistance are changeable. Right
Yeah.
now, price is coming down to this. So this is the support level. It breaks this support. So this becomes the newfound support, right? This
Mm-hmm.
becomes the newfound
Okay.
resistance. Remember, resistance is as if somebody's above you and they're pushing you down. So what is this? Something's above this red line and it's pushing it down, right? Support, something is holding you up. Think of somebody supporting you. Somebody's holding you up.
Okay.
Something is under this, holding price up where it doesn't want to break this point. That is showing you that this is a qualified support level. This would be a resistance looking from this point of view,
Yeah.
right?
The point of view.
Price works away. But
Yeah.
now this would be a support looking from this point of view. Because remember, price can work his way down. This is support, right? Works through, this is support, breaks through support. This becomes the newfound support. Price comes down, comes up. This would be the newfound resistance, right? Works his way up. This is the support, comes back up. This is the resistance. If the price was to break this and was to come up here, and I was to make a level, make another level right here, because this would be another level, right? Let me fix that a little bit. More right here. Let's just say it was right there. This
Okay.
would so
Now,
this was resistance. Price breaks through this. This will be the newfound resistance, and this will be
okay.
the newfound support. Does that make sense?
Got you.
So
Yep.
daily, like I said, daily level. So I'm gonna delete this because this one's not. I'd have to do some more confirmations to make sure that one is. So let me mark off that new one. Hold on real quick. Oh, so that I was right. That one is it. Right there, and then let's back test to see. And that's good. That's cool. So the red is representing what? That is representing resistance, and support levels. That means when price works to those levels, it can change trends once it taps those levels. Not all the time, right? But most of the time, you can do that.
Right.
Does that make sense?
Yeah. Yep. Yeah. 100%.
So, like I said, what we need to do, we need to mark off the daily resistance and daily support levels. So we've already marked off the daily ones, right? What do we need to do now? We need to go to the 4-hour time frame. Now it's on the 4-hour time frame. We need to mark off the 4 hours, right? Because that's going to give us a good indication of where price can change in this time frame. Because keep in mind, what do we know? When price comes to these resistance and support levels, right, on the daily time frame, we remember red is that time frame. We know what we should be thinking of going the opposite way, wherever it is happening. Price comes right here, we should be thinking about buys. Price comes right here, we should be thinking about buys. I did this literally for 2 months. Made a good amount of money from doing this because that's all I knew. It's very valid. You're not going to win. It's not 100%, but it's 75 to 80%. And 75 or 80% is going to win you a lot of money.
Yeah. Okay.
Because think about it. If you're to follow this, let's see how many times you'll be wrong. Starting from this date right here. Let's start from May 10th. We come to this level, we sold. 1. Come to this level right here, we bought. So now we're 2 for 2. We can't. Yeah. It came right here. We tried to buy. We lost. So now we're 2-1. Right here, we try to buy. 3-1. Right here, try to buy. 4-1. Came right here. Try to sell. 5-1. Came right here again. It made a double top. Try to sell. 6 for 1. Okay, working our way down. Right here, what do? Try to buy. 7 for 1. Right here, what do? Try to sell. 8 for 1. From May, we would have been 8 for 1 in our trades. Look how many pips this is. This is a lot of pips that we're dealing with. This right here alone is 200 pips. So imagine catching 150 to 200 pips all for doing that. Just letting it ride. That's what I was doing for how many months? I was doing that for 2 months. You got to keep it simple. Don't play those games. Make trading simple as possible, right? What did we do right here? I'm telling you, if this is what you did and you weren't to do nothing else, the only thing about this is, right, it only comes once in the blue moon type stuff like that. So it may only come one time a week, right? This time came June 2nd. Then when is this? This came June 9th. This time came what? June 12th, right? What time this came? July 20th. What do we do to put ourselves in a position to win those? We set alerts, right? We put alerts. Where are we going to put an alert? I'm going to put an alert right before it comes to that red line, right? So it can notify my phone that it's coming there. I know what. Okay. Once that alert comes, I literally put in the note section, buy Euro AUD. When the alert comes, I'm already prepared and I'm already ready to go because I already know what to do. Every time it's coming to a daily resistance and support levels, it's easy money. People make trading way more harder than it needs to be. If you keep that factor right there, you will already be profitable in the market. Now, are you going to win 24/7? No. That's why, what do? After you make your entry, you have a stop loss. Where am I going to put my stop loss? I'm always going to look, for instance, let's do this. Let's make it simple on yourself. What we're going to do, we're going to act like right now we were to try to enter in this trade. Right here. Mm-hmm. So we're acting right now. We were trying to enter this trade. At this point, what do we see? What do we see? We see price right here, coming right here. We already have our alert, so we're already looking for it. We're entering on this red line. What do we need to do? We need to look to the left because what do we have to put our stop loss? We have to put our stop loss up under this. Why do we have to put this under this? Because what a bank or financial institution they're going to do, they know people are putting their stop loss where? They're putting it right there at the wick. They're putting it at this wick, or they're putting it at this wick right here, right? We need to have a stop loss to cover that last wick. Why? Because that's going to give us the best chance to win the trade because the banks are going to push price down, knock out stop losses. Then what are they going to do? They're going to then they're going to shoot the price up. So they're going to take everybody's money, right? Then they're going to start working their way up. Think about it. If you're a bank or a financial institution, are you just gonna buy at this red line? No, that's too easy.
Right.
People are waiting on that. There's people that literally sit there waiting. You're gonna knock out people's stop losses, right? Then take their money and then work their way out.
Wow.
Keep in mind, we're trading with the banks. So
Right.
right here, right, we're entering off that red line. What do we need to put a stop loss? This is straight swinging. Where are we gonna put a stop loss? Okay, well, we gotta have a stop loss to cover it. So this right here is a 47 stop loss. This is gonna cover that zone right there. So you have to make sure whatever amount of pips you're catching, it needs to be covered by this. So we're catching 47 pips. We're risking 47 to 50 pips, which is a normal for a swing. If we're risking 47 to 50 pips, what are we trying to catch? We're trying to catch a 1-to-3 ratio. Why? Because that means we can lose this trade 2 times and win this trade once, and we'll still be considered profitable. Why? Because how many pips are we trying to catch? We're trying to catch anywhere from 100 to 50 pips because we're risking 50. That means we can lose this trade how many times? We can lose this trade 2 times, that's 100 pips. Win 1 time, that's 150 pips. We're still considered profitable in the market. Now, people, what they do, they're so more focused about the rate of wins. Yeah, you know what I'm saying? Yeah, what is that? That's 33% win rate. But what does that mean? That means we're still profitable in the market, even though it's a 33% win rate. You don't have to have an 80, 90% win rate in order to be profitable in the market. You just have to make sure that risk to reward ratio is something worth catching, so it gives you more opportunity just in case you lose. You could have took this trade 3 times and won once and still been profitable. And that's saying that you were to catch 150 pips minimum. Let's play this out and see how many pips it went. So we can really realistically know. At this price, okay, price is starting to work its way up. Cool. Just being patient. It's taking maybe 2-3 days. That's fine. We're swinging. You're not rushing, right? Because at this point, you have your stop loss at break even. You've already secured some partial profits up here, right? And you're just chilling and you're letting it see how far it's going to play out. As it's going up 30, 40, 50 pips, you're just taking partials. You're taking the game out of you're thinking too much. You're not thinking too much. You're swinging. You're just letting it play. You're watching your money build. It's going up. It's going up. It's going up. Now, are you going to catch all these pips? No. At some point, you're just going to close out and take your money. But just right there, so think about it. Price works. What does price do? Price comes to this level, right? We know what? Every time price comes to this level, it's going to reverse. And when it reverses, right, now it's not 100%, but 80, 75%, it's going to reverse. When it reverses, it's going to pull back even harder. Why? Because this is a 4-hour level. Every time price comes right here, you see where it pulls back. This is 200-300 pips. That right there move is 200-300 pips. It's going to pull back a lot. Why? Because think about it. Price just slammed into a break, a resistance level, major resistance level. And now it's going to go the opposite way. This is a daily resistance level. It's not a 4-hour. It's not a 1 hour. This is a daily one. So it's not going to break it as much as it would a 4-hour or 1 hour. It's going to hit this. It's going to reverse, and it's going to reverse. When it does reverse, it's going to make a big move. Let's calculate how many pips that was. That right there was 300 pips just alone, and we're still going. It may come back reverse. I don't know how it finishes. Cool. Right there. That right there is 330 pips. Keep in mind, what was our risk to reward? We were risking 50 pips to catch what? 150. We could have ended at 150. Or we could have just kept letting a small lot ride and keep riding it and keep taking partials as it goes by and just let it play out. Anything is just extra. Just that move alone. That right there, think about that. Catching, so that would have been your whole trading week right there. Your whole trading week, you would have just done that and you would have been good. That's one trade. Now think if you catch 2 to 3 trades like that, the whole thing, you've already took out half the thinking part out of it. You're chilling. You can go to work. You can go do other things. You have business calls. You know what I'm saying? You have marketing meetings. You have to go speak to prospects. You're not worried anymore, right? Because you've already caught this amount of pips. Some people don't even see 200 pips the week.
Yeah.
You just caught 250 from chilling, and you're not even worried.
Right.
And you're only calling what? 1 or 2 signals out, 3 signals, 4 signals for your team. Not too much. You don't gotta call. You don't have to call too much. But everybody knows when you call signals, what? The chances of you winning a lot is high, right? Because you're risking a small amount. You're only risking 50, but your reward is what? People don't mind taking your trades, right? Because why? You don't have to win every single time, but everybody knows when you do, you're risking a small amount to win what? A big amount. They know all it takes is one of these trades to wipe out all those losses you took all week. Does that make sense?
Yeah.
So like I said, what are we going to do? So that's the daily. This is daily. So what are we going to do? We're going to go mark up our 4 hours. Support and resistance, that's the most important thing. Some people don't believe in it. That's their reason. That's how they trade. Everybody has a different way of trading. This is how I trade. That's why it works for me. Will this work for you? I'm not sure. But like I said, if you want to know something easy that's not going to be stressful, this is what I did, and I was profitable from it.
Okay.
Now, what are you going to do also to confirm that? You're going to look at the candlestick formations. You're going to look at this. This is a double bottom, right? Right here. This is a double top right here. You're going to look for head and shoulder patterns. You're going to look for other things that are confirmations to hop in the trade, right? But this is as simple as it gets. So right now, we just made a 4-hour resistance level right here. We're going to zoom in a little bit because we're going to create the other ones. This is another 4-hour right here. Right here. This is another 4-hour one. Right here. Cool. And then right here. That's another one. All these, like I said, may not look like a lot, but that's what? This is 40 pips, 70 pips, 140. Like, it's a lot because this is Euro AUD. It's very volatile. You know what I'm saying? So we know what price can reverse at those areas at any time, right? Price comes right here, breaks through, retests, works the way up. Now, it's not as strong as the dailies, right? But it's a 4-hour level. So that's good opportunities to enter. Remember, we only want to enter off resistance and supports.
Right.
Don't enter off resistance supports, you're asking to get your money to. I'd rather enter off the top levels like this than to be playing these little middle games, right? You're playing these middle games, and if you don't know candlesticks, you're just going to get ate up. Don't know what you're doing, you're just going to get ate up. Put yourself in the best position to win. How are you putting yourself in the best position to win? You're looking at candlestick formations. You're looking at wick patterns. You're reading the candlestick Bible. You're only entering off support and resistance. If the trade already goes, it's too late. Trade comes up to here, it's not in the vicinity of this, it's too late. You missed out on it. Put alerts, make trading easier for you. Put alerts at places where price can reverse. That way you can come to your computer, you can look at it, you can evaluate it, then you decide whether or not you want to hop in the trade. Don't put alerts right there at the line. Put it before the line so it can notify your phone so you have time to get to your phone. If you put it at the line, it could just tap the line and work its way up. You missed the trade, it's over. Put it before, so now you know, oh, price is close to that area that it can reverse that. Let me go ahead and take a look at it. Let me start looking at it. And that way you can look at it and then you can decide at that point whether or not you want to hop in the trade, as opposed to letting it decide for you by putting it at the line, and then you're just literally taking a leap of faith. You look at the computer, oh, looks like already took off. Damn. Now what are you doing? You're putting a little, you're trying to enter up here, right? Comes back, retests, knocks your stop loss out and keeps going up. When you play these little middle games, you're asking to get your money took. Make trading easier. Make it as simple as possible. Put alerts. Put yourself in the best position to win. Alert is no different than an alarm going to work. You're gonna put an alarm to go to work, right? Why? To put yourself in the best position to win. Or you're just gonna take a leap of faith and say, you know what? When I wake up, I wake up. No, put an alert, right? So it can notify you that price is at the area that you want it. So you can decide on whether or not you want to hop on the trade. Not let it decide for you. And now you're playing these little consolidation middle games and you're losing your money.
Gotcha.
Right here, what am I gonna do? I'm gonna take some 1 hour, I make 1 hour resistance and support levels. I'm gonna mark them up right there. Price comes right here,
Okay.
reverses. Price comes right here, reverses, 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 reverses. Comes right here, reverses. Comes right here, reverses. Comes right here, reverses.
Wow.
Make trading easy. Make trading simple for you. Right here. Price comes right here, reverses. Price comes right here again, reverse. I'm just marking up the levels. Now you're gonna start being able to predict where price is going. And it's gonna make it easy. Because now when price is moving, right, you're watching, you're gonna see whenever I do the live trading, you're gonna start seeing, oh, price comes right here. What does it do? Retest, works its way up. Price breaks through, I know it has to retest. It's gonna come back and retest. Price doesn't just shoot up like this without retesting at all. It's gonna retest at some point. I need to have a level so when it does retest, what can I do? Enter in again. Maximize profits. Profit maximization. Oh, I know what? It's gonna retest, it's gonna shoot back up. I'm only entering off what? I'm only entering off support and resistance, right? This is the support. This is the resistance. It comes back and retests. I know what? It's going to potentially keep going up. Why? Because it just came off a daily support level. It's going to go up, right? So I know it's going to keep going up because it's a daily support level. This is the rebound from that. Price is not going to just rebound right here and stop off a daily support. It's not going to do that. It's going to keep going up. It makes vicious moves. The only time it's going to go back down is to make a double top and a double bottom. If it makes a double bottom, then what is it going to do? Go back up again. And at that point, you're looking for retests to keep entering in the trades, keep maximizing profits. Does that make sense?
Yeah. Yep.
So I'm going to go ahead and put this video on here so you can watch this again. And like I said, this is going to be a short session. You don't have to do too much. The video is going to be on YouTube and under the mentorship pages and stuff like that for you to watch it just at your will. Watch this video all weekend because literally it's going to change your whole outlook on how things are going, how you're going to look about things, right? When we go into the market tomorrow, I'm going to do the Sunday analysis tomorrow and look at this video, and then things are going to start making more sense. And now you're going to just following this, you're going to be able to call trades for your team, right? Because you know what? The chances of it reversing at a daily resistance or support level is very high.
Right.
You may not be able to call, like I said, it only happens once every week or once every 2 weeks. So even if you're calling one signal every 1-2 weeks, that's completely fine. Because you're calling them, and when you're calling them, they're catching a lot of pips from it. You see what I'm saying?
Gotcha.
All right, my guy. Appreciate you. You know what I'm saying? Like I said, we'll definitely chop it up tomorrow. I'm gonna upload these videos. If you got any questions, feel free to ask, my guy.
All right. Where do I go on YouTube? Just the
No, don't worry about it. I'm gonna post it and put it in the mentorship group chat. You're in the chat, right?
Oh, okay. Bet. Okay. Yep.
All right. Say less, my guy. All right. Have a good one.
Cool. All right. Be safe.